Right, hi guys, great. So we're on to chapter 21, and this is looking at some particular instances still to do with the individual. A lot of individual cases, special cases, really, and one of them, of course, is to do with your primary home, your principal home, your main home. And again, as you can imagine, it does seem a bit unfair that on disposing of your home that you would have to pay a capital gains tax on it. So the initial principle here is that if you have lived in your home, which is usually the case for most people, for the entire life since you bought the thing, then technically there is no tax to pay. But we do have, again, like I say, these instances we're going to look at. So this is typically referred to your home as your principal private residence. So this is you almost have to elect or choose it to be your private residence. You might find that a bit weird, but because you do have people who have two homes and they might live in one most of the time, or a couple who kind of choose one of their residencies, or people who break up and then they have this additional home and they were living in one before they moved to the other. So there can be some confusion as to which is yours, but you have to elect, you have to choose in writing and make HMRC aware, if you like, of which of the homes you intend to be your main home, so that you can then gain access to this exemption when it comes to the gain. So typically, if you have occupied your principal private residence for most of the time throughout the period of ownership, the gain is there'll be a gain. Of course, you bought it for something, you sell it for something. There is a gain. Technically, that gain is exempt. But if you only lived there for a part of the period, then, of course, the only bit that's exempt, if you like, is the period that you actually lived there, for the part of that period. Otherwise, the rest of it is not exempt. So if you live in a home for 400 months, and you are there for, technically you're there for, and your gain is 40,000, and you are there for 400 months, of course 400 out of 400 times this is exempt. But if you only lived there for 350, if you occupied it, let's put it that way, if you occupied it for 350 over 400, it is 350 over 400 times 40,000 that is exempt. The rest, 50 over 400, is not exempt. So that's what we're trying to target: what is exempt and what is not exempt. So this question of ownership, of how long you're there, is what we're going to really look at, and what is considered to be, of course, actual ownership, and what is also considered to be deemed ownership, right? So there is a kind of an issue to deal with with this scenario here, trying to make sure we get as much ownership as possible, so you can get as much of an exemption as possible, if you like. And that brings us, if you like, neatly into the next bit, in terms of considering what ownership or occupation, forgive me, really is. But the first thing you have to do is calculate the gain on the property, and then get the total period of ownership first. Then what we need to then decide is, we want to, again, get as much of that time as possible, so you can get as much occupation as possible. And so we talk about deemed and actual occupation. Actual occupation is when you actually live there, but you do have instances of HMRC allowing what's referred to as deemed occupation. And so the exemption, right, becomes definitely the gain times the period of occupation over the total period of ownership. So in the perfect world, period of occupation 400 months over period of ownership 400, and then times the gain, and the whole thing is exempt. We will also look at what's referred to as letting relief as well, because you see what I mean, because you can technically have been out of your home but have let it, and you're allowed that as well. So now, what is considered to be deemed occupation? Let's look at that. Deemed occupation is considered, here we are. So deemed occupation, first of all, these are just rules you have to remember. The last 18 months of ownership. So I always suggest that you actually clearly categorize those last 18 months. So if someone's away from their home for the last 18 months before they sell it, it's just as though they lived there. So the last 18 months of ownership is always classed as deemed occupation. You are allowed 3 years for anything. You can be away traveling up to 3 years for absolutely any reason. It doesn't really matter. You're given just 3 years, whatever. If you're working overseas, of course, that is also considered to be deemed occupational. So you're deemed to be living in your house even though you're working overseas. And if you're working within the UK, you're allowed a total of 4 years. So it doesn't matter if you work 1 year this period in Newcastle, and in a couple of years you work 2 years in Reading. Doesn't really matter. You have a total of up to 4 years whilst working in the UK, if you like, away from your primary residence. Now, the key issue here with this, which is, I guess, part of the exam, is I want you to think of it like this. HMRC wanted you to be the case that, well, it's not like you're kind of away from your house all the time. So there's this argument here that, well, listen, what's really happening here is that you live in your house and then you go away and do something and you return to your house, if you like. You return and then you live there again and then you go away and then you come back. So this is the context in which this is designed. So just to kind of be clear, you cannot say, oh, I'm going on holiday to Jordan or whatever, and then for a year and a half, and then from there you go away to another country for another, whatever, 3 years or 4 years. There must be a time when you return to the house, and HMRC want to see this, you return to your house. Now, the problem, of course, is that if for example, you cannot if, for example, you cannot return to your house for valuable reasons, for work purposes, and then you have to go away somewhere else, then that's fine, if you like. So typically because of work. So really, apart from work reasons, if it's not for work, so if it's not for B or if it's not for C, so you can see here, this is all to do with work. If it's not due to work, then you otherwise you must have this bracket, this rule of prior to living there, and you must also have lived in the place afterwards. So now I'll show that, I'll explain that, but it must really be, if it's not for work, then pretty much, then it's unfortunate you cannot claim these exemptions. But again, like I say, in an example, I'll show you what's going on. So that's the key point. It really must be really to do with work, that otherwise, you can't claim it. So let's look at this example here as a first one. So look at this. It says here that, this is another experiment in counting months. So you really have to kind of be aware of what's going on. And I'm going to kind of use this with the answers straight away, as opposed to building it from scratch. But I'll talk about it from scratch, and then you'll see where I'm going. So here we are. This person comes along and they buy a house on the 1st of January 1994. And then they sell it and they make a gain of 341. Now, under normal circumstances, if they lived in the house for the entire period, all of this would be exempt, right? We would just literally get the total occupation, which would be from the 1st of January 94 all the way to the 31st of December 18, right? Get that, whatever, say, I'm just going to pretend that was 500 months. 500 over 500 times 341, 200, and we'd be done. All of that is exempt. No gain. But that's not been quite the case here. She hasn't quite lived in her house. She hasn't quite occupied the house over the entire period of ownership. So what we need to do is to find the total ownership and then find the actual and deemed occupation. So we can separate out the bit that, if you like, that she is actually and deemed to have occupied the house. So let's look at this here. From January 94 to 30th of June, she lives in the house. So this is our actual occupation, isn't it? Now, again, like I say, you have to really be good at making sure you get the months right. I'm just going to I typically just make sure you have to count the months and get that right. You can look at it and get it straight away, but make sure you're sure. So for example, I always say, well, Jan 94. So December 94 is 1 year. December 95 is another year. And so that means the June 96 is 6 months. So I have 12, 12, and 6. So here I can see that very clearly that they have 30 months. So she actually occupied, so 30 months of ownership and 30 months of actual occupation. I mean, I'll take us to the answer, see how the layout is. I just want to go through the theory. Then we have a period of residence before this trip. So she now goes backpacking, and she goes away for 6 months. So I'll just change my pen color. She goes away for 6 months. Yes, over here. One second. She goes away for 6 months. Right, sorry, I was just interrupted there. Someone knocked on my door. So we were talking about trying to understand how we work out the amount of exemption on the gain based on occupancy in relation to ownership. So here, this person has been away. Celia has been away backpacking around Thailand. It says for 6 months. Now, again, I'll come back to the answer. I'm just talking through the theory of it. So she's been away for 6 months, and this is backpacking. And so technically, this falls under away for any reason. Any reason. So she's been away for any reason. So she's allowed up to 36 months, if you like, for any reason. So we can take 6 months from there. So all of this, if you like, this is deemed because she didn't actually live there. So we have 6, which is I'm using a different color. So this is deemed. So in total, that's 36, if you like. Well, when I say in total, that's 6. So 30 and 6. So I'm just getting ownership for now and just adding that across. Then it says she lives in the house again from January 97. So that's to 31st of December. So you can see that's December 97, December 98. That's another 2 years. So that's 24 months that she actually lives there. So, and that's ownership as well. So we're kind of on track. Then she goes away to work for an employer, and she goes away from January 1999 to this 30th of September 2004. So she's not in her home. So there's no actual ownership. The question is, oh, sorry, I'll just change my pen color here to red. Just so that I keep the colors the same. So here she lived in the house for 24 months. I'll change it back to blue for deemed. So here we have January 99. So that's December 99, which is 12 months. December 00, that's another 12 months. December 01, that's another 12 months. December 02, that's another 12 months. So right now she's done 48. You're allowed 48 months for going to work anywhere in the country. Anywhere in the UK, 48. She's done 48. So, right, I'm thinking, okay, so that's 48. And then she has December 03, another 12. And then September 04, that's 9. So that's 21 months that she technically is not allowed within the 4-year rule. So that's 48 deemed definitely allowed. And there's this 21. What do I do with it? Well, she still has, it says that she's gone 6 for any reason, and she still has, it's 3 years, so that's 36. So she still has 30 months available to use for any reason, and here's 21. So that 21 is allowed. So we can therefore allow the 21 because she can use the excuse of any reason, the 3-year allowance there. So all this is deemed. So you can deem all of this at 69, which is the total time she spent, if you like, and therefore total ownership 69. I'll put that there as well. Now, this is what I was talking about. Technically, she should come back to her home before she gets this on an around the world cruise. But because it's to do with work, the argument could be that, well, she's just traveled straight from work. I mean, it's really far away from home. So it's less the fact that we're trying to break a rule. It's just the fact that it's inconvenient to kind of, maybe she could argue that it's inconvenient to fly home if I do this. So in a way, she doesn't really break the rule here. It's okay. So it now says that she goes on an around the world cruise trip, and that's for 3 months. So far she's had 36 months. She's used 6 for backpacking. She's used 21 for the balance from working in Newcastle. And we have another 3. So there is some more space. So all of this 3 is allowed and deemed. And what does she do? She returns to the house. So that's brilliant. So she comes back to the house, and then she lives in the house from 205 to 14, which is in effect 9 years. Yes, isn't that's 9 years, isn't it? Because, or is that, yeah, that's 10 years, because technically that's the 31st of December 2004, technically. So which gives us 10 years. So there's 10 years there, which is 120 months. But so yes, you have that. So she lives in the house, and that's fine. I'll change that pen color again. Sorry, forgive me, just to make it simple. So that's 120 when she actually lives in the house. So all the living in the house you can see is in red. All the deans are in blue. Now, I said to you, what is good to do is always get the 18 months out of here, December 2018, and that's 1st of January 1st of July 2017. Because you see, what this does is the last 18 months are always allowed. So the last 18 months are deemed they're always allowed. So the last 18 months. So the question here is, I really want to be looking at the scenario from the 1st of January to the 31st of June, 31st of June 2017. That's the period I'm interested in. So now what we have is a scenario where she lives in her house up till then 2014. Then she moves out to stay with her boyfriend from the 1st of January 2015. And I will technically stop here at the 31st of June 2017. So that's January 2015, December 2015, 12 months, December 2016, 12 months, to June makes it 13 months. So for this to be allowable, she has to return. There has to be occupation pre and after. She doesn't return just before this 18 months, because this 18 months is really on its own. It's a period on its own. She doesn't return to the house before she sells the house. So in effect, that is not allowed. It fails the kind of allowable test. So the 30 months, yes, ownership, but it isn't allowed. So that's the key issue here. So let me just take you to the answer, which is much neater. I just wanted to get the concept in clearly. And what we see here with this is this picture here. So you can see this is done. So this is how the layout really occurs. So you should, because thankfully you're doing your exams in Excel. So you'll be able to have, if you like, exempt and what is chargeable. I don't really mind. I remember doing this, and I used to write was I'd write actual and then deemed, just so that I would really know what was going on and I could clearly see. And those are all that we were talking about. That's the total. You could have had this here, total. It's up to you. So actual occupation, 30 months that we said. I think it's good to have what's actual and what's deemed, so you can clearly see what's going on. And then you have some actual occupation. That's that 69 we talked about. That's the 3. That's the 120. That's the last 18 months. Here we cannot use, simply because this 30 just cannot be used because she did not return. You can see here the period of occupation before and after deemed occupation. Do not need to be immediately before and after, but that was only purely because of work, because that would have made it inconvenient. But there is no inconvenience on returning to the house if it's not work related. So because there's no return. There was no return, if you like, prior to that last 18 months is the issue. And that's how we deal with this. So what we now see is we now have a total of 300 months. 270 months of that is exempt. So I'll find my gain, and my gain was 341. So that's that. 307 is exempt. You could have argued the other way around. You could have argued that 30 over 300 is not exempt. That's fine. Doesn't really matter. The key point is that we pick up we've picked up what's actually exempt. It is a bit long. This chapter is a bit of a long one. There are a number of examples here, but that we have to get through, but we will get through it. Right, and then, of course, what we now have is this, if you look here, this is because everything gets taxed at that, as we said, with normal, as usual. So what we now have here is we have, this is the chargeable gain of 34120, take off the annual exemption, and we have taxable gain of 22,420, and we tax it as normal as we've been doing so far. So what we have here is this kind of remember that we just look at the band, isn't it? We look at the band. The band is 34,500. Look at the taxable income. Just so coming down here, we can see that taxable income. Look at the band. Taxable income was 22,500. That means there was 12,000 left in the band. We go back up here. That's the band, 12,000 at 18%. It is residential, remaining gain at 28%, and that's the capital gains tax. So that's how we deal with that. And again, as usual, a number of questions will bring you into this place of familiarity with dealing with the whether or not you've returned or not, and you'll sort of get used to it, that if it's for work-related purposes and it's inconvenient, then it's fine. But otherwise, the person must satisfy the requirement of returning. Cool, great stuff. See you in the next video.